You are listening to Charting Wealth for Wednesday, the 28th of December, 2016. We're almost to the end of the year, last trading week of the year. Market is still sliding sideways. Yes, technically, the S&P 500 and the Qs were up for the day, but still 40 cents below on the S&P 500 where the market was on the two-day candle back on the 14th, Wednesday the 14th. So we've really just been sliding sideways. We can see on our two-day chart that we're continuing to lose energy derivative oscillator down, and the PPO, our former MACD, the price percent oscillator, is continuing to move in a downward direction, getting what looks like closer and closer to a crossover. Hasn't happened yet. Like we said, it was an up day, still above the two-day trend. I'm sorry, not above the two-day trend line. Below that, it was broken back on the 16th of December. Haven't been able to redraw a new one. We're still above the weekly trend line. If we look intraday on our 2-hour chart, we can see the market bumped up in the morning. We had a crossover going up at that point in time. That, of course, was your potential input point. We've continued to talk about that. Market may continue to move up. January effect. Hopefully some of you are plotting this and playing it just to see what happens, but all that movement ended late in the, early in the afternoon on the noon candle, and then we saw the market roll back, although we did have that crossing over going up. The time to have gotten in would have been sometime around 10:30, not before, and sometime in there before the noon candle. And again, that's where we are. You can sure try hopping in at this point. We do have all our indicators indicating that's what the market should be doing. So we'll see how that plays out on the S&P 500. I do have to apologize. I am still a bit under the weather. We can see where our other crossover points on the 2-hour occurred. Of course, the best input point so far was that input point back on the 5th of December, where we had that crossover on the 2-hour chart, and the movement was stellar as it went up. It's since dropped off. And again, for all of us for trend following, once you do have the market move over and you have your weekly crossing after your 2-day, and then you have your pullback, and then you have your first crossing going up on the 2-hour chart after the weeklies moved in the same direction as the 2-day chart and the 2-hour chart, which we had happen back around the 5th of December. That was your beautiful entry point in the afternoon. I mean, incredible movement. If we look at what happened there, the high, the worst position you could have gotten in would have been 221.03. Where did we see things go before all that up movement ended? I mean, literally somewhere in the neighborhood before it actually crossed over on the 2-hour chart going down. The top was 228. So that was a nice gain over just a couple of weeks. So not even 2 weeks. So again, that's the best time. When you start getting long in the tooth in the movement and you have retracements and recrosses, we start just getting a little concerned, although, again, we have everything setting it up for us. I'm just a little worried about the end of the year coming and just seeing how January typically is with the market rolling over sometime after the year starts. But again, make money while the sun is shining, while they're cutting hay. Okay, we're going to go back to our weekly chart. And again, if I have to take a cough break, please forgive me. I am a little under the weather still. The Qs, QQQ, up for the day 0.52%. Remember, we're waiting on the Qs to cross over on our weekly chart. And if we look at the weekly, we can tell that it has crossed over. Now, it's not closed out the new weekly candle yet. We just have a new weekly candle forming. So some trepidation there. We will draw that at the end of the week if indeed we do have a confirmed crossover, if it doesn't pull back on us as it has before. It's been looking for a couple of weeks like it was going to cross. So again, that is a potential good sign. That does offer the opportunity, if you want to take a little bit more risk, to potentially get in, because we have the 2-day chart going in an uptrend also with that crossover on the 2-day chart back on the 8th of December. Now, if we look at our 2-hour chart, what do we see going on? Well, we saw it cross over, actually going up on at 10 a.m. this on Tuesday, and actually bolted up even higher, and then bled off a little bit of that energy in the afternoon. So again, and that was strong up movement, actually busting through the Bollinger Bands, going above that 2-day trend line that had been broken a while back, that we are going to be able to potentially continue to see that movement push through it, which is a good sign. So we do have entry points on both these charts, the Qs and the S&P 500. Again, be careful. If these things retrace and they don't work, then jump out of them quickly. So we are going to continue to keep an eye on those. Now we're going to move on to bonds. Bonds were down. Bonds had just crossed over, going up on the 2-day chart. We don't have a weekly. The weekly is still in a confirmed downtrend, but have bonds reached a bottom? Well, it's pretty cool to contemplate that and to look at it. We saw bonds bottom out somewhere around what the 117.25 mark, and then we saw a crossover on the 22nd, the 2-day chart going up. We did have a down day on bonds today, 0.32%. If we look intraday on our 2-hour chart, we can see that we had a pullback and a crossover going down. But again, okay, if we see it cross back over going up, is it something you want to play? Well, remember our weekly trend. We want to be trend followers. We want the weekly and the 2-day to be in the same direction. Everybody loves to get in after a market's bottomed. The problem is calling the bottom. The safest money waits for the weekly chart to move over going up and then trend follow later. We don't try to call the bottom. If you want to be risky, you can try to do that with the 2-day chart. Just be aware you're betting against the weekly. That is the big wave pushing you back over. But again, watch for it, practice it, see. If you can guess this right and you can jump in, you will do well, Padawan. But if you don't, you will get hammered. Again, you can get out, but watch it. Let's just watch it and see. That's what we're all about here, is experimenting, learning, seeing what works. Okay, lastly, we're going to go to gold. Excuse me, my voice is going quickly. Gold was up 0.58%. We can see that gold is trying to cross over, going up on the 2-day chart, still in a confirmed down move on the weekly. Gold is losing downward energy on the derivative oscillator, and we do see the last two 2-day candles. This is just the first day of the latest 2-day candle on the 27th. But gold looks like it's bottomed out somewhere around 108. We shall see. It is trying to cross over going up, but again, still in a confirmed weekly down move. If we look intraday, what do we see going on with gold? Well, it crossed over back on the 19th in the morning, actually on that afternoon candle. And then what's it really done? Not a thing. It's slidden sideways, even though it crossed over going up. It then hammered down and then really slid sideways. Is still below the 2-day trend line and below the weekly trend line. So we'll continue to watch and just see what happens. Hopefully our 4-hour chart at some point in the new year will start working again, as it did last year when it quit working at the end of 2014. End of 2015, and then started working again at the beginning of 2016. Folks, that's where we are as we end the day on Tuesday, as we go into Wednesday, the second to last trading day of, well, we have Wednesday, we have Thursday, and Friday. Folks, I have not been well for the last few days, and hopefully I'll get better and I'll have my full faculties, but hope you found this helpful. We always love bringing this to you. Want to give you a heads up for the fans. We will be traveling, actually, to Central America the 1st through the 7th of January. I am trying to see if the internet connection is any better than it was the last time I was at our place in Central America. I don't think it is. Maybe I'll do what I can while I'm there, but we may not be able to provide you with our typical daily services. This happens once, twice a year when we do travel out of the country, and I will do what I can the 1st through the 7th of January. Just be forewarned. What that would give you a great opportunity to do is to go on your own, chart what we do, fill out your daily market worksheets, and then let us hear back from you as to how well you did, what you learned on your own. We'll see as that develops. Thank you so much for being with us. You can hear my wheezing. God bless. If you have any questions, problems, concerns, always go to chartingwealth.com. Let us hear from you. Sign up for the newsletter if you're not already receiving it. Guess what you'll get with that sign up? Great things. You will get our daily market worksheet. The 10 minutes that you listen to this program, we want you to fill out that worksheet every day. It will supercharge, turbocharge your training. Ask anybody who's worked with us for any amount of time. Best thing you can do. You'll also get the layout that we use at freestockcharts.com, and you'll get our 15-minute How to Read a Stock Chart video. Working really hard during my downtime, being a little sick, on the book. We'll continue to put that together, and we'll start putting out chapters in the new year. Thank you so much. God bless you guys. You appreciate what we do. Go subscribe to the YouTube channel. Most important, go to iTunes and subscribe. Let us give us a 5-star rating. Say something nice about us. We so appreciate you. God bless from chartingwealth.com.